You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 16th day of January, 2024. Hope you had a great holiday weekend. For those in the audience who live in the U.S. who actually had a holiday yesterday, and I realize that there are many of you in other parts of the world that don't celebrate Martin Luther King Day. But for those who had the day off, I hope it was a good one for you. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast, that's private. That's for our traders only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page, it says 5-day free trial, no credit card required. Click the link, fill out the registration form, hit submit. It's a simple process, but unless you fill it out properly, then it won't go through and we won't know that you wanted to take the trial. So it's got to be the correct email address. All the information needs to be correct, okay? Because there's an automated process there. And if the square peg won't go in the round hole, okay? So do that, and then you'll enjoy 5 consecutive trading days with unfettered access to every resource our lifetime members, our passport holders have access to. Not just the live training room every day for 2 hours and 15 minutes, but also one-on-one mentoring, Logic 247 alerts, concierge trade alerts, round-the-clock support via Telegram, much more. Basically, we treat you just like you were a lifetime member for 5 consecutive trading days. Now, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. Let's say you signed up today. Okay, the first thing we got to do is get your desktop set up and get your indicators indicating. If you're using the TradingView platform, and of course we need to get the invite-only indicators turned on for you there. And then tomorrow will be the first day of your trial. So you're thinking, okay, so I'm only going to get 3 days, Wednesday, Thursday, Friday. Not so. You'll also get next Monday and Tuesday. 5 consecutive trading days. So, whether you're listening to this live or after the fact, don't worry about what day of the week you sign up. Just sign up. No credit card required. It really is free. There's no gotcha. Okay? Now, when the live training room ends each day, we take a 30-minute break. And we come back for the afternoon broadcast. That would be this one. There's a couple different ways to join the afternoon broadcast live. Best way is you only have to do this once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link. Complete the 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. Inside that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit of that is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy and you can't join live, but you would like to get caught up later. You can. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. Super easy to remember. You already know the YouTube part. Just remember /CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, as we're doing right now. And by the way, this broadcast is open to the public. Unlike the first broadcast, which is reserved for our traders only and those taking the free trial, this broadcast, everybody everywhere on planet Earth with an internet-connected device. So as I was saying, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's almost 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Now, we don't expect you to watch them all, but just, pick a couple at random. Listen in for a little bit. You'll quickly discover the thread of connectivity, the thread of continuity. It's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. All right, let's get going with our daily devotional and our word of prayer. Now, this is the final day of the topic we started last week, new beginnings, because it's a new year. And that means a lot of different things to a lot of different people. Our scripture today is probably the second most well-known scripture. John 3:16, of course, would probably be the one that everybody knows. And right behind that would be Psalm 23. That is our scripture today, and I'm going to share it with you from the Message translation. Now, I know many of you have heard and read the 23rd Psalm many, many times. But this is what it sounds like via the Message translation. God, my shepherd, I don't need a thing. You have bedded me down in lush meadows. You find me quiet pools to drink from. True to your word, you let me catch my breath and send me in the right direction. Even when the way goes through Death Valley, I'm not afraid when you walk at my side. Your trusty shepherd's crook makes me feel secure. You serve me a 6-course dinner right in front of my enemies. You revive my drooping head. My cup brims with blessing. Your beauty and love chase after me every day of my life. I'm back home in the house of God the rest of my life. 23rd Psalm. Now, Someday I'll go deep with you on why Jesus and God, same thing, refer to us as sheep. It's a long it's a long passage, so I won't get into it today, but there's a good reason, and well, we'll cover that another day, maybe tomorrow. So, final day of new beginnings, I will fear no evil. Have you ever found yourself feeling all alone in overwhelming circumstances, facing trouble, difficulty, and trials, feeling as if you were in a valley with potential disaster looming on either side, going through some attack of the enemy that is so cataclysmic that it seems you will not make it, or that you will lose your mind, hearing the enemy whisper, "This is it. You'll never get out of this." In times like these, Psalm 23:4 is so powerful. Though I walk through the valley of the shadow of death, I will fear no evil. Why? Because you are with me, Lord. The consciousness of God's presence brings us out of fear, even in the valley of the shadow of death. We can tell the enemy, "Whatever you throw against me will not shake me. Look at who's walking with me. Almighty God is walking with me. And to get to me, you have to go through him." That's better than having a big brother when we were kids facing some bully at school. We have somebody better than a big brother. We have Jesus who died in our place so that our sins could be washed away and we could have eternal life. After he's done so much for us and brought us so far, will he let us fall in a black hole now? No. Will some power on this earth be able to overcome his love for us and his protection? Never. We can all agree with this as Christians. But how do we get to this place? How do we arrive at a consciousness of God's presence in our lives? Thank God for the Holy Spirit in us. He's the one who makes God's word real, who makes it more than just a concept. So that when we say the verse, "I will fear no evil because you're with me," we can know that we know that we know that he is indeed with us. The psalmist said, "I sought the Lord, and he answered me. He delivered me from all my fears." That's Psalm 34:4. It's as we seek the Lord that we are delivered from our fears. It's as we go to him in prayer, asking the Holy Spirit to make his word real, that his promises get from our minds to our hearts. In other words, it's in God's presence that we become aware of his presence. At the beginning of a new year or even a new season in your life, we don't have to panic or dread what might be up ahead because God is with us, no matter who or what is up ahead. In fact, Romans 8:28 tells us, we know that all things work together for good to those who love God, to those who are called according to his purpose. Because he's with us and has promised never to leave us nor forsake us. Join me in a word of prayer. Heavenly Father, we come before you in prayer, our hearts comforted by the words in Psalm 23, a psalm that echoes the assurance of your loving care, guidance. Lord, you are our good shepherd, and we acknowledge your presence in our lives. In moments of uncertainty, you lead us beside still waters and restore our souls. We find comfort in knowing that you guide us along paths of righteousness for your name's sake. Even in the midst of challenges and shadows, we fear no evil, for you are with us. Rod and your staff bring us comfort, and we are grateful for the assurance that your goodness and mercy shall follow us all the days of our lives. Lord, we place our trust in you as our shepherd, knowing that you provide, protect, and lead us with unfailing love. As we face the various aspects of our lives, may the truths embedded in Psalm 23 be a source of strength, peace, and hope. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Well, happy Tuesday. Feels like a Monday, but it's a Tuesday. True story. Check my taskbar. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 231 points. The NASDAQ down 45. S&P 500 down 18. The Russell 2000 down 16. Now, for the Russell, our man in the street, that's just shy of 1%. So keep your eye on the downside, at least for now. In the commodity basket, crude oil down 19 cents, trading 72.49 last. Gold down $22.50, trading 29.10 last. That's a drop of just over 1%. Silver down 28 cents, trading 23.05 last. That's a drop of almost 1.25%. In the Asian markets at the close, Nikkei down 282 points. The Shanghai up 7. The Hang Seng down 350, almost 2.25%. And in the European markets at the close, FTSE down 36, the DAX down 50, CAC down 13. So, we had a mixed day in Asia, only due to those 7 little points from the Shanghai. It was a red day for the UK, and so far, it's a big red radio Tuesday here in the US of A. So with that, let us go to Logic 247. For anybody that's new, Logic 247 is our 24/7 around-the-clock E-mini alert service. But it's not just E-minis. It's also crude, gold, silver, euro, bonds. We have just entered week 285. And over the last 285 weeks, we've issued over 15,900 individual handcrafted alerts, approaching 16,000 alerts. Wow, it's a lot. And what we've averaged over the last 285 weeks is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders. Now, this recap was done at 6:30 a.m. Eastern this morning. Valerie will update it this afternoon and then again probably this evening before she retires. At this time, we had a total of 16 alerts issued. We were still waiting on the outcome of 9. That gave us 7 actionable alerts, of which 1 or 14% would have been stopped out, based again on market structure and that very simple process that we teach all of our lifetime members. Now, the logic alerts are based on current price action, but there's time built in to each alert. For you to receive the alert, go to your 30-minute chart, see the window of opportunity that the alert represents, and then be prepared to take action when price gets there, using exactly what Michael teaches you every trading day in the live training room. Now, a logic alert can come out at 2 a.m. or 2 p.m. Why? Because futures trade around the clock, and we have traders around the globe. Their day session is our night session, and vice versa. Along with the logic alerts, which typically have multiple targets, we still have our original alert service, the concierge trade alerts. They're a little bit different in a couple different ways. So let me bring those up. Okay. But the CTAs are based on historic price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs do not come out around the clock. They're posted as a static report shortly after the Globex open each evening, Sunday through Thursday. This week, because we had a Monday holiday, we didn't start till last night. Normally, this would say Sunday, but it's the holiday. So the market opened. The Tuesday session began. To people who come from the world of equities, they think of the trading day as being 9:30 a.m. to 4 p.m. Eastern. And that is true for stocks, for equities. But for futures, it's a whole different story. So the Tuesday session began last night at 6 p.m. Eastern. 10 minutes into the first 30-minute candle, I published the report for all of our traders. Now, because this broadcast is open to the public, you want to grab a screenshot? You can. If you're watching after the fact, you can just hit the pause button on the video on our YouTube channel, youtube.com/CFRN, and jot down the numbers that would be important to you based on the markets that you trade. Okay. Now, what's the first thing you do when the report is published? go to the 30-minute chart of whatever markets you trade or are trying to learn how to trade. We'll use the ES as an example, but it would be the same for any market, and we're going to go through every one of these markets before the broadcast ends. So the first thing you would do, using the ES as an example, is at 6:10 p.m., you would make note on your 30-minute chart where price is at the time the report is published. It will always be between these two numbers. Now on the logic alerts, I look left for you to spot potential obstacles to the trade. With CTAs, you get to look left yourself. Understand that the alerts are part of the training process, okay? They're not designed for you to just trade the alerts and go, hey, why should I worry about trading? This guy just gives me trades all day long. Well, we want you to become self-sufficient. You should want to become self-sufficient. If your goal is to trade for a living, it's never going to happen as long as you have to depend on someone else to tell you when to get in and when to get out. Why not learn how to do it for yourself? That's where your focus should be, okay? So again, with the logic alerts, I look left for you, and I spot previous swing highs, swing lows that can become current resistance or support. With the CTAs, you get to look left yourself, and of course you can use the logic alerts as applicable, as a little cheat sheet. Because the goal is to eventually see you be able to do this by yourself, okay? Where you don't need the logic alerts, you don't need the CTAs, because you're now able to read the chart and know with certainty what the next high probability move is. Now, knowing what the next high probability move is not the same thing as knowing what's going to happen next. Nobody knows what's going to happen next. Not man, not machine, no indicator, no oscillator, no algorithm, not no way, not nowhere, not know how. When God created Adam, he did not give him the ability to change the past or know the future. And that holds true today. The market has too many participants who can change their mind at the drop of a hat, put in a huge order, pull a huge order. I'm talking institutional traders. Retail traders don't move price. It's the institutional traders that move price because of their account size. Our strategy, our methodology isn't designed to outsmart the institutions with their infinite resources. Our strategy and our indicators are designed to help you see exactly what the institutions are doing and understand why they're doing it, so that you can do the same thing long enough to get your goal for the day, then have the discipline to put the mouse away. Now, when you mark where price is at the time the report comes out, also draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute VBC, it's attempting to reach the long target. If price gets below the 30-minute VBC, it's attempting to reach the short target. Now, the VBC is the green line you'll see on my charts, on the daily and on the 30-minute. And it's on the 30-minute chart that all alerts are created. Logic 247 and the CTAs. Whether you're on a tick chart, a range chart, a 5-minute chart, a 30-minute chart, hourly chart, daily chart, VBC is very important. If price gets above that green line, you should anticipate higher prices. When price drops below the BBC, you should anticipate lower prices. For the purpose of the CTAs, if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Pretty simple. Again, you look left to spot potential obstacles, previous swing highs and swing lows. And over time, you'll learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open for the week till they close Friday afternoon. Price is above the 30-minute BBC, it's trying to reach the weekly trading zone above. Price is below the BBC, it's trying to reach the weekly trading zone below. We've published the zone since December 14th of 2009. That's a long time. They come out Monday morning, 6:15 a.m. Eastern, except when Monday's a holiday, as yesterday was, so they came out this morning at 6:15 a.m. Eastern. Now, when we go to the charts, the zones you see today will be last week's zones, because all of the alerts issued last night were based on last week's zones. All of the alerts issued after 6:15 a.m. Eastern this morning are based on this week's zones. So tomorrow on this broadcast, you'll see this week's zones on my chart. And as we go to the charts, you'll see that price holds sway. The zones hold sway with price as you begin the new week, and then usually by the second day, the new zones have completely taken over. Beyond that, resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach a goal for the day. So let's go look at the daily chart. There we are. Okay. This was the non-session yesterday, January 15th. The markets were open, but we weren't here. We didn't do anything. Now notice we've got a high, a lower high, a lower high, a lower high, and a lower high. But we're sitting on top of support. Blue and climbing. This is the CFMA1. I refer to it as red and falling, blue and climbing. One is bearish, the other bullish. This is the green line, the BBC. It stands for bull bear cross. When price crosses below it, we're bearish. We anticipate lower prices. When price crosses above it, we're bullish. We anticipate higher prices. Price always reverts to the mean. And in our case, the mean is green and it's called the BBC. Okay? And the pullback to the BBC holds more often than it doesn't. As you can see down here, these pullbacks holding. Then we had a very long stretch before we got our pullback, but it held. Okay? Remember, these are daily candles. Now, none of us trade off a daily chart, most likely. I certainly don't. And some of you don't trade the S&P, though most of you do. No matter what you trade, it could be a different futures contract, be an individual stock, crypto, forex, pair, ETF, doesn't matter. If you'll learn to spend 2 minutes with the daily chart of whatever you trade before you begin your trading session, you'll gain valuable insight into what the deep pockets are doing. You know, the ones that actually move price, the institutional traders who have accounts in the hundreds of millions, billions, and even in some cases trillions of dollars. See, when they trade in that kind of size, that moves price. So by looking at the daily chart, we're looking at what they're looking at. Institutional traders look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. Okay. So we know we have resistance at the step line. Now, the step line over here, when the step line crossed from the left side to the right side of blue and climbing, we said, okay, we're going to get a pullback to the BBC. We ran up and hit the 50% fib extension, and boom, pull back to the BBC. Now, when the step line gets directly above price, it becomes potential resistance. When blue and climbing gets directly below price, it becomes support. Now, we spiked blue and climbing just enough to touch the 38% fib extension. Over here, it took 1, 2, 3 days to get through that resistance. Okay. Retracements, you expect those to provide support when price gets there. And keep in mind, fibs are an area. They do print a specific price point on your chart, but it's still an area. Okay. Same with extensions. It's the same 14th century math for the extension as the retracements, just applied in a different manner. So we made it through the 38, but we couldn't quite hit the 50. So we get another pullback. We make another run. Now we've put in basically, you can call it a triple top. You can call it a quadruple top. Yeah, we can go with triple. Because right here, as you can see, the high was 48.36.5. And the previous day was 48.38. Now, why is this important? Okay, because we're able to identify where major resistance is. Obviously, the high of today is resistance. 48.23 is important resistance. 48.36, important resistance. 48.38, important resistance. And then 48.40. See, you wouldn't be able to see all of that on your 30-minute chart or your 5-minute chart, or your tick chart or your range chart particularly. You also know where support is. We knew coming down. In fact, I posted the prices last night in the discussion group where you should expect to find support. And this candle, gonna get a reading on it. The low of this candle was 47.83.50. Okay. So let's do this real quick if we can. Yeah, can. So last night, maybe better if I don't blow it up. ES approaching daily support at blue and climbing, 47.94. Below that, the 38% fib, 47.82. Fib extension. Below that, the daily BBC. And then I showed you where resistance was at 48.13, 23, 36, 38. Then the 50% fib extension at 48.40, where we have a triple top. Okay. So last night, looking at the daily chart, I was able to tell you where the market was most likely to find support. And it did. It's not magic, it's just knowing how to read a chart. So what's today's low? 47.83.5. So I missed it by 1.5 points so far. Now, if price were to come back down through blue and climbing through the 38% extension, then we would expect support at the BBC. Now, even though the pullback holds more often than not, we know that eventually price will trade through the BBC. That keeps the markets flexible. Price never travels in a straight line. Leg, retrace, leg, retrace, leg, retracement. And we go above the BBC and we start drawing legs in the opposite direction. Leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg, retrace, leg, retrace. See how that works? You're either drawing legs to the downside or the upside. We're at support. Below and climbing is the low of the day, and then the BBC. Now, if price were to trade through the BBC, that would give us a window of opportunity down here, conservative window, something like 47.52 down to 47.22. It's about 30 points right there. Now, of course, you would use your 30-minute chart as your roadmap and your 7-tick range as your trigger chart to navigate that 30-point window of opportunity. All right. Again, no matter what market you trade, stock, crypto, forex, ETF, spend 2 minutes with the daily chart, your trading results will improve over time. Okay. There's no overnight magic silver bullet, no holy grail. The vertical line separates today, Tuesday, from yesterday, Monday, when we weren't here. Way back over here is Friday. And if I keep scrolling back, you'll see Thursday, Wednesday, etc. Okay? So 10 minutes into the life of this candle is when the CTA targets were published. So this candle, so 10 minutes into this candle, the targets came out. You're below the BBC, so you're thinking short, right? You're not even thinking about this long target at this point. This candle opened at 48.10 and dropped 6 points to the target at 48.04. We traded through the target, lag, retrace, found resistance at red and falling, and then down we go all the way to the weekly trading zone at 47.86/87. When price drops to a zone, we expect support. Now, these are last week's zones, but this is what I meant by the previous week's zones still hold sway over the market at the beginning of the new week. And then, typically Monday's the first day of the week, so by Tuesday the new zones have taken over. So it may be tomorrow when we truly see the new zones kick in. So the market found support at a zone that was published last Monday morning at 6:15 a.m. Eastern. When the market hits support, it's going to go look for resistance. When the market finds resistance, it's going to go look for support. Market finds support, it's going to go look for resistance. We managed to get through the BBC, but we weren't able to take out this high right here. You see that? It's really important. Teaching you how to read a chart here. We weren't able to take out that high until this candle. Okay. Now, once we took out that candle, that gave us some room to run. And it took us up to this week's zone, 48.15/16. Market, now when price drops to a zone, we expect support. When it moves up to a zone, we expect resistance. It's exactly what we got. So now resistance has sent the market looking for support. We're below the BBC. So I don't want to confuse traders who already have this week's zones, but the potential, see how blue and climbing is starting to hook over on its way to turning into red and falling. We're most likely headed back down to this zone from last week. And then if we take out this low, got a lot of room below us. Now this is critical. We had a bearish cross here. Okay, that's when the red line crosses below the green line. That's a bearish cross. When you have a bearish cross that leads to an extended move, I would say that's pretty extended. The first time price revisits the area of the cross, it will almost always be good resistance the first time up. Now there's people out there scratching their head wondering, why in the world did the market stop dead in its tracks right there? I mean, we were getting bullish, right? Heading to the long target. Not until you take this out. And the fact that there's a weekly trading zone there at 48.15/16 has nothing to do with this bearish cross. It's a completely different methodology. Now, this is important. When you have two different methodologies pointing at the same spot, whoa, you better slow down and take a good, long, hard look at that. And as you become a passport holder, and we spend time together in your unlimited one-on-one mentoring sessions, I'll teach you all that. Okay? So we know where we're headed. 88 down to 86. Probably a pretty good opportunity. On the Dow, Michael should have been here. Michael, you there? Now, Michael's going to pop in and give us a recap of what happened in the live training room. Then we're going to go live on TradingView for 30 minutes, and then I'll finish up this recap. Here's where we opened last night. The first 30-minute candle closed below the BBC, and we ran right down to the target. Through the target. Now, plenty of room. 755. So we had a 55-point drop to the target. You only need 20 points to get your goal for the day. But it continued to the zone. And when price drops to a zone, we expect support. When the market finds support, it will go look for resistance, which it found at red and falling. Pushed us all the way down here. If I scroll left, I can show you why the market found support here. Even put in a double bottom right here. When the market finds support, it's going to go look for resistance. Bearish cross, resistance. Bearish cross, resistance. Is that you, Michael?
That is me.
Okay. All right, guys, we're going to pause here with the Dow, but we will cover the Russell, the NQ, crude, gold, silver when I come back in about 45 minutes-ish.
Here we go. Over here. I changed my mouse, but now I have a different problem.
Oh, bummer.
This one doesn't like the surface of my desk. I haven't really tested out enough to see if it sticks, but we'll see. So it works out. You should be hearing everything right now. Right?
Your audio is crackling a little bit, but it looks good. I think your audio is going to be fine.
Okay.
I think it was
All
just
right,
a
let me get
momentary blip.
all right. We're good now. Good afternoon, everyone. Today is Tuesday, the 16th day of January, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com, and right here is where you sign up for. You click on that button, and that button will bring you to this registration page, where all you need to do is fill it out. All right, gives your first name, your last name, your email, your phone number. All these little drop downs, just fill out the little drop downs. Fill them out accurately, please. If you have, you give us your TradingView login ID. If you have an Ninja, give us your machine ID. Doing that will enable us to get your indicators ready for you. If you're going to read the spreadsheet, you have to read all the CFTC risks. And we lost 3 ticks in crude. Made 4 ticks on the ES. That put us at plus $470 per contract this morning. Today it took 21 minutes and 5 trades to get to the goal for the day. At that point, we're up $2,600, and we took a total of 28 trades this morning. So on the month now, we're at $4,600. That is over 10 business days. So we're averaging $463.5 per hour. I'm sorry, per day. Yeah, $4,855 per hour. But on the year is the same as the is monthly right now because it's January. So if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, starting in January of last year, and one contract per month. That's why we're at 13 contracts now. So far this year, you've only had to work 4.15 hours, almost 4.25 hours, and you would have averaged $4,855 per hour. Now, that is with 13 contracts on. All right, 13 contracts. All right. Let's get into the trades. We'll start out here on the crude oil. Now, on the crude today, let's see what we did on crude. We never really got positive on the crude. We started off with a small win right here of 2 ticks, and then we stopped out on this one right here, and then we lost 5. We made 5 more ticks on that one. Right, that put us at -3. So we're at +2, then -8, then -3 overall. During the break, there was some big movement here in the crude. We had 1 blue arrow right there, a green arrow way back here, 1 blue arrow right there. And that was pretty much it. That was pretty much it for the crude oil. Here, I'm going to try something a little bit different. There we go. Yeah, I guess that's okay. On the Russell now. Okay, you guys, I'm testing something with the purple arrows, so just ignore them for right now. Okay, the purple arrows can trigger when any of the other arrows trigger. They can trigger at the same time. You'll see they trigger a lot with the black arrows. Right? See them on top of the black arrows, sometimes on top of the blue arrows, green arrows. Something I'm working on. I started working on it on Friday. But let's see. In here this is the Russell. Now we didn't trade the Russell. Well, we had a lot of break-even trades on the Russell to begin with. We had 1 right there. Break-even trade right here. Then more break-even trades there. 1 here and 1 there. And 1 there. Another break-even trade. And when we finally get on the board with the Russell, we stopped out. I'm going to get to it here in a minute. Maybe we're not. Maybe I didn't write it down. All right. We stopped out, and then maybe this is it right here. I guess this is it right here. We stopped out -10, and then we picked up a break even, a +3 that got us to -7, then a +5 that got us to -2, and then a +10 that got us to +8 on the Russell. That was it. All in that last half an hour right there. During the break, there was a blue arrow here. That was enough to get you a break even, and nothing else during the break. Okay, nothing else during the break. that was the Russell. The ES is really simple for us today. We only had one trade on the ES. Where is it? Where was the trade? It's right here. Picked up 4 ticks on this one trade. Right after that, we got nothing. During the break, now let's get into the break, which began right in here. There was one blue arrow here, gave a little bit of profit, and that was it. We are not getting a lot of movement on the ES lately. Okay, not a ton of movement there on the ES. And we'll back to this style here. Excuse me. So the NQ now. Let's go all the way back to the beginning here with the NQ. I'm just going to do the arrow thing. Oops. Alt, arrow. There we go. There's a lot of bars on the NQ. So we'll just scroll all the way over. See where we stand. Okay, bunch of blues in there. We were up over 100 ticks on the NQ at one point. Okay, getting close here now. All right, here we go. Our first trade on the NQ was right here. We stopped out minus 20 ticks. And then our next trade was right here. We picked up 30. That put us at plus 10. Then another 30, put us at plus 40. Then we stopped out again, back down to 20. Then we had a break even right in there. Another break even. Then we went from 20. There's a stop out in here somewhere that I didn't list. We went from 20 down to 0. And then right here, we picked up 30 ticks. So somewhere in here, there was a stop out that we took. I think it was probably right here. We went long and stopped out. So we went from 20 down to 0, and then went from 0 to 30 on this trade. Then we had a break even. Then we went from 30 to 60 on that trade. And 64 on that one. And 64 to 94 on that one. And then went from 94 to 100. Oh, I'm sorry, 94 to 98. We picked up 4 ticks there. And then we got into the lesson plan, so I didn't trade. You can see there were some decent blue arrows in there. Market really started moving around at one point during the lesson plan. We had a break even there. Went from 98 to 102 somewhere. And then we stopped out. So we went from 98 to 102. So we had another 4 tick trade somewhere. And then went from 102 back down to 82 right here. That was where we ended it for the morning session. Oh, we had one more break even trade right there, it looks like. And the break even right there, it looks like. And that was it. Later for the morning session. So let's see, blue arrows. It was one blue arrow there, a blue arrow there, and blue arrow there. But that would have given you 30. That would have given you at least a break even. The first one would have stopped you out. That would have given you 30. And that would have given you at least a break even. That would have given you at least a break even. That would have given you 30. This would have given you at least a break even. We're doing well here. A break even again during a break. The blue arrows are doing well during a break. Again, the blue arrow is the highest probability. The purple arrow is something else going on right now. So I just want to watch it on these different markets during the day and see how it performs and see if there's something I can do to make it better. All right. If you're in here, so we finished the NQ with plus 82 after stopping on that one. Plus 82 is what we finished. Now, if you have not taken a free trial with us, then go here at mytradingiq.com here. All right. And on the spreadsheet today, we ended with plus $470 contract. 82 ticks on the NQ, 8 on the Russell, minus 3 on crude, and plus 4 on the ES. So 470 is what we ended with this morning. It took 21 minutes and 5 trades to get to $2,600 today, and we took a total of 28 trades this morning. So on the month now, we're at $4,635 a contract. All right. Pretty good stuff. Now it's time to get into the live stream. So I'm just going to jump over there and we'll get into that live stream. Right. I don't know what's it all over on me. Here we go. 2018, 2002, Mouse 23. See, this mouse isn't any good either. I've been having issues with my mouse today. My mice. We finished with $470 a contract this morning. 82 ticks in the NQ, 8 ticks in the Russell, -3 on crude, and +4 on the ES. So on the month now we're at $4,635 with one contract. That's in the room in the morning. Now, let's get into what we have going on here. We just had a blue arrow short right here that is not Q, so we can't take another trade in that direction yet. Okay, that would have given you some profit if you'd taken that blue arrow right there. And yes, and so now over here, oil seems to be going really slowly sideways. Yes, so I want that to pull back up and test the ribbon right here. Hasn't quite gotten to the ribbon, so I want that to pull back up and test the ribbon. One of the things that we've been watching for the last month, it seems like now, is the Bitcoin. And we're looking for it to pull down into this box. This is Ethereum, but we're looking for that to pull down into that box too. I think over the weekend it might have, right? Not quite. Not quite. It's not a box either, it's a circle. But nobody corrected me on that. I guess I didn't bring the question box up, so you might have corrected me and I didn't know it. All right, nobody corrected me on that. Like this was the box we were talking about on Bitcoin, and it did go down into that box. So now it should get a box. All right, that's what we were talking about since December when it was back here. We called this, and eventually that, and that. And now, well, there's no real reason for it to do anything big right now. So, hang on, I can't see my DOMs right now. Otherwise, there we go. On the Russell. The Russell's showing a short right in here. Purple arrow shorts. It's not really showing a short right here. Let's go back here right now to just 4. Okay. The ES is showing a short. Now that's a back arrow short on the ES, which isn't a bad thing. We've already bounced off the ribbon here once since we changed direction, so it's not a bad thing. We're coming out of the no trade zone. It should make it down to the prior swing low, and it's headed toward the midpoint right here. Okay. Now the other markets in there don't have anything going on with them right now, so we can't do anything. Okay. Let me just check over here. I don't see any questions in there, and let me check this one too. I don't see any questions in there. Okay, if you're watching in the live stream right now, if you have any questions, you want to see anything other than futures, all you have to do is ask. Type in a symbol. I'll be happy to go and look at it with you. All right, let's go here, there. And so we need to push down here. Should get down below the prior swing lows, what it should do right now. I'm in that trade. Let me bring it over and show it to you. Good right now, but here it is. Now the stop is 10 ticks away. The stop is 10. Okay, it's not the mouse. It just did it again. So I'll go back to my other mouse. This mouse is a lot more comfortable in my hand. Okay. All right, so the down here to the prior swing low. It's going to stop us out right there. -10 ticks on the ES in that trade. We were +4 overall in the morning on the ES. Okay. And this. The outer bands here, when the outer bands are flat like this, I really just don't like to trade. I like to see separated. You want to see the outer bands be separated. Yeah, I think I closed that. Didn't I? No, I didn't close it. What I can close is Word, probably. That uses up a surprisingly large amount of stuff. I can close Ninja. And that is closed. All right, so on the end, we're starting to move up a little bit. It's not really separating the outer bands yet, so it needs to move up a little bit more than that. It's sneezing a bit. Okay, so it's starting to separate just a tiny bit right now. It's going to give us, it didn't give us any kind of arrow. It didn't come out of the oversold, so it didn't give us any kind of an arrow. And is the black line still in the green? Right, there's a purple arrow, but it's also a black arrow. And the black line was still in the green there, so that trade in there. Here it is. Stopped break even on that. And it just came back and took me right out at break even. You believe that? You see how fast that happened? There it is. That was the stickiness in my mouse. Maybe it is a mouse. I don't know. I have 5 more mice. So I ended up with a break even on this. Now you see I want my stuff to break even, and it came back really fast and came down and got my stuff. The yes stopped us out to the tick, but that does not mean it's not going to go down. All right. And we don't have anything else on these other markets. You see this blue background here, the aqua background. That means it's in a no trade zone. So when you see that, just move on. Go on to some other market and don't even waste your time with it. All right. It's there to keep you out of the trade. All right. So we are getting a higher swing now on the NQ. So we can take another pullback now if we get one. All right, higher swing means it gets up above the level right here. Means price gets up above that level right there. All right. Just going sideways there, going sideways here, going sideways here. And we still have not gone down to there. Let's get some other symbols here. I don't see anybody asking any questions in the live stream, but if you do have any questions you want to see anything, all you have to do is ask. Okay, so this is Bitcoin, and now let's get Mr. One. Mr. Let's see how that's going now. Wow, that is getting killed. Okay. So it did go down here to the BBC like we thought it was going to, but it has not moved up. So now, remember what I said last week. This was building a head and shoulder pattern right up here. I don't know why that happened. This was building a head and shoulder pattern right up here, but now it's got the head and shoulder pattern down here. So if we go sideways here, build this other shoulder out. Okay. Right here at this level. So this failure right here, if it drops down below here, right now, if this Mr. Oh, I'll use this. if it gets below here, that's bad news. All right, I'll make that red. I'll put 2 of them there. If it gets below here, that's bad news. All right, then it's going to go down. It'll find support here. It should find support there, but I would think it's going to go all the way down here. This is where the neckline is. All right, it should build another shoulder over here. What should happen is it should go sideways a little bit, right in through here. We can't use that. This. Can't use that. This. Yeah, and this right here. So what it should do is build out a shoulder right through here about this big is what it should do. I don't know what it's going to do. That's what it should do. Okay. Now, did we get anything else on these futures yet? Not yet on the futures. Okay. We had this one here that we got, we ended up to break even on. This one back here that we ended up stopping out on. And the blue background, the aqua background that you see here is a no trade zone. So the futures is not giving us anything to work with right now. After go other equities, if you have any equities you want to look at, anybody can type in any kind of symbol if you want to. Let's see. What is that? Tesla, I think, right? Oops. Didn't mean to do that. Put that back on. This one. I was trying to put on Tesla. Okay. Let's see what that looks like. This is on a daily chart now. And it turned bearish right here when the MA1 crossed below the BBC right there when you had that. It turned bearish, but right now it's kind of actually bullish. It should pull back up toward the BBC is what it should do. You see how the black step line crossed inside the MA1 right there? That means price should be BBC. So that's a little bit bullish in the short term, but it's bearish overall. Is what I'd say that. For anybody that's watching into the trades that this Apple. I haven't looked at Apple in a long time. All right, so the thing is happening here with Apple. You see how the black step line crossed inside the MA1 right there. Price should get up to the BBC. It made a run at it, but it didn't quite. So now it's continuing it to move down. I would say if Apple drops below 180, that is probably going to get down to 165 fairly soon. This is on a daily chart, mind you, but in the next month, I would say 165 is possible if it drops below 180 right here. That's what I'm thinking with Apple. What's this? The AC. This is Ford. Okay, so Ford is selling off of here. This is an inverted head shoulder pattern. It's building the shoulder ugly the way it's doing it though. This really needs to recover and get back above the BBC right here. If it doesn't do that, then it's in trouble. I don't know, it's the first quarter, so I don't know what earnings, if that's going to have any effect on the markets, but it looks like they're getting ready for some bad news. That's what it looks like to me. Let's see. The NQ after this last green arrow did put in a higher swing and gave another green arrow right through. Now we're in a no trade zone, but we're coming out of the no trade zone right here, so we could have another trade here on the NQ. Okay. What time is it right now? 1:14. Okay, so we still have 16 minutes left. Pim, I don't know if you're out there listening right now. You are out there listening. At least it says you are. All right. So I will send a meeting. I don't think I did already. Did I send you a link to that meeting? Let's go and check. All right. So we now have a higher swing here on the NQ from these green arrows. Need that to pull back down and test the ribbon. Over here on the ES, we're going into them. Over here on the Russell, we're in a no trade zone, and on the crude, we're in zone. Okay. So watch for the pullback here. It's got to hit the ribbon, or it's got to get into the oversold to give us a trade right now. It hit the ribbon or get into the oversold. Keep doing that. We need to burn almost into the oversold now. Almost down into the oversold, and we need to pull back down into the ribbon. And we're coming out of the no trade zone here on the Russell. We're also out of the no trade zone over here on the crude. No, we're still in on the crude. Sorry, we're out of it on the Russell. Okay, now you can take that black arrow on the NQ if you want to, but it should pull the midpoint here probably. I would think we'd start the midpoint, and that should act kind of like a magnet, pull it back down to the midpoint. Okay. And over here on the Russell, it should go back down to the ribbon. That's what we're looking for. All right. Well, the NQ just get a big gap up right there. It does have a higher swing, so if it pulls back again, we want to see this get down into the oversold or price bounce off the ribbon, one or the other. And all right. So as it pulls back here, we're in the oversold right now. So as we come out of the oversold, you could have another arrow trigger here. I would like to see the NQ pull back a little bit deeper. It still can pull back down to the ribbon and test the ribbon there, but I don't know if it's going to. It'll have a black arrow right now if it pops out of the oversold. That's the NQ. I'd rather see a down close on this and then expire bounce off the ribbon, but I don't think we're going to. I think we're going to get an up close. It's going to give us a black arrow. The ES, we want that to pull back down and test the ribbon here. The Russell is doing the same thing. So all of them need to pull back and test the ribbon here. Okay, we did get the down close. That's good. Okay, so now we might get the up close, test the ribbon too. So now 33.50, 33.50 up to 37.50 is what you're looking at right there. All right, that is a ribbon trade right there. Okay, it's a ribbon trade. It didn't get an arrow because it didn't come out of the oversold yet. But it did bounce off the ribbon. The long-term direction is bullish, so everything is good with this trade right now. It's the equivalent of getting a blue arrow the oversold. So if it pops out of the oversold right now, it'll have a black arrow because you're not touching the ribbon, but it'll still be a good trade. If you get that black arrow right now, it pops out of the oversold. We need 8 ticks in profit to bump the stop to break even. So it's got to get up here to 40.25. Hit that stop to break even. All right, now it could stop us out before it gives us the black arrow. Now it'll be a green arrow if it pops up out of the oversold right now. Oh, it'd actually be a blue arrow. There it is, a blue arrow. So that's okay. We're in a pretty good spot with the blue arrow. We jumped early over here. And we're actually in, yeah, I ended up stopping out anyway. Darn it. Thought that was really going to come together just right. We took the bounce off the ribbon here, which was a valid trade. And then the blue arrow triggered after it. It's all a valid trade. But then it would have stopped us. If we waited for the blue arrow, it doesn't matter. It would have stopped us out anyway. In the meantime, the ES is pulled back and it's hitting the ribbon. And 94.50 up to 96.50 is what we'd be buying on the ES right now. Now it's 1:21, so we have 9 minutes left in here. I don't know how many more trades we're going to get. I don't see any questions about any of the symbols. Don't see any of the questions about any of the symbols in here. All right. So we want this to pop out of the oversold right here. 94.50. No, just a out of the sold is what we're looking for on that. Right down here. Right now, if it did that, that would give us a green arrow on the ES, be 93.75 up to 95.75. Okay, that's what we'd be buying on the ES. Now the NQ turned around here. You see how the ribbon just changed from bullish to bearish? See all 4 lines in a ribbon, bearish. The Russell, the Russell didn't give us any trades on the long side. That seems to be turning right now too. And the ES might trigger 1 trade here on the long side. All the other indices are going down. Now, they could just be a deep pullback on all the other indices as they start moving up. So just going to trade what's in front of you, right? This black arrow with the purple extension on it is not a trade right now. It's not a valid trade. Right, again, the purple things are just something I'm working on right now. Here's the up close on the ES. It has a lot of the oversold, so it's not even a valid trade because the black is not in the green. So that's not a trade there on the ES yet. Okay. All right. So we didn't end up with a valid trade there. And it looks like the markets are turning down. So that's a good thing. All right. We're now bought, but we want to hit the ribbon. Okay, we want to bounce off the ribbon after a direction change. So we're not going to take anything with that right now. Something I was just going to go over with you. I forgot what it was. Totally forgot what it was. Anyway, 23.50 down to 21.50 right now on the I'm sorry, 23.50 down to 19.50 on the NQ. It's points from the high of the bar. 4 points from the high of the bar. 19.50 is what I'm going to sell right now. I'm trying to sell it. Here it is. Okay. 19.50. It's 4 points from the top of the bar. It needs to be one more tick right now. Hey, now that number just changed a lot. It's going to be 20.70. Okay, if this bar closes up, it's not going to be a trade. The reason I can do this, the reason I can put the order on ahead of time with confidence like that, is because these are range bars. And so if I know the top of the bar or the bottom of the bar is going to be ahead of time, it's going to be proactive this. Okay, the only thing I don't know, well, now I do know, this is going to be a trade setup. When the black is into the green, there's no more shorts. Okay, the ES finally gave the long trade, the green arrow long trade. It finally gave that. This is kind of what I was talking about a minute ago. We didn't know if this was a pullback or if it was a direction change. And I don't have this direction at all right now. The markets, they've been kind of like this so far today. Let's go here and take a look over here and see what's happening with these other things. That was forward, right? Yeah, I guess there's nothing really to look at over there. If you're watching a TradingView, I guess I haven't said this in a little bit. If you're watching TradingView right now, and you haven't taken a free trial with us and you want to, go here to mytradingiq.com. This is where you sign up for the free trial. Okay. Click on that button. It's going to be into this registration page. Just fill out this registration page. We don't ask for any credit card. No credit card required for the trial. Okay. The only way to get access to the indicators is to sign up for the free trial. All right. Results so far this year. And these are our results for last year. We're up $106,304 with one contract last year, trading 2 hours a day. Okay. If you follow our plan and you quit trading when you get full for the day and did it just like I did last year, I started out with one contract in January and I added one contract per month and they with 12 contracts in, and I averaged $2,440 an hour last year. This year, so far, we're starting out with 13 contracts because it's had one contract a month. And so far this year, we're averaging $4,855 an hour for 13 contracts. If that interests you, take a trial. Come here, mytradingiq.com, sign up for the free trial right there. Right. The ES did give a little bit of a long trade. It should have been from right here at 95 and a quarter, something like that. You want to bump your stop to break even after you get 4 ticks profit in the trade on the ES or any one of these 7 ticker charts. After you get 4 ticks profit in the trade, you want to bump that stop to break even. All right, the NQ's gone into a no trade zone here. This is a no trade zone. This is a no trade zone. This is a no trade zone. So we don't have a lot of opportunity this afternoon. That's what it was, Tim. I was going to go check and see if I sent you that thing. And I clicked on the wrong thing again. I really got to go see if I even created it. I think I did. Thought I did it on Friday. Oh no, I created it for yesterday on Friday. That's right. Ooh. Okay, I must not have because I see nothing in the upcoming. The ES is really struggling here, but it wants to get up to the prior swing high. This is where it's trying to get up to at 48.01. I just go for 4,800 would be good on that. I'll show you the trade in a minute. I won't trade on that. That's why I haven't bought my stop to break even yet. Okay. But when you have a lot of contracts on, you get a lot more slippage. So here it is. I'm going to throw even now to 4 ticks in profit, but my entry should have been down here. And not getting a great entry on that. I'll lock in just 1 tick on this. It should, this is the sliding thing. I don't know if you saw that, how it kind of stuck to it up there and it slid it all the way down here. 48.0125 is what this should be going up to. Right there is where that should be going up to. Okay. Now I'll lock in 2 ticks. And we'll see where it goes from here. All right. This triggered outside the no trade zone. Now it doesn't matter that it went into a no trade zone once the trade triggered. You just keep on the same plan. If it goes into a no trade zone because it consolidated and got a little choppy, that's okay. Just stick to the plan. Okay. So we have 6 ticks locked in. 8 ticks. 10 ticks. So now we made up for that one stop out that we had earlier. This is where it should go, but I'm going to take that off of there. 12 ticks. 14 ticks. Right up here to the prior swing high is what I was saying. 125. 16 ticks. There we go. 16 ticks. It's what? $200 per contract times 13. So I just made $2,600 in that trade. And the NQ is starting to move up as well. It's time to wrap it up. So we'll wrap it up with that nice trade on the ES. I had a horrible entry on that, but I still managed to get 16 ticks out of it. So that's a good way to wrap up this session. Again, if you have not taken a free trial with us, go here to mytradingiq.com. Click on this button, sign up for the free trial. There's no credit card required for the free trial. A lot of stuff going on here, but it's really not that hard. Right? It's really not that hard to. Once you understand what you're looking at, just follow the rules. Right? Right, and that's it. We can pass it back out to fabulous Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am.
Okay. Okey-doke.
Okay, recap of the morning session.
Today, it took 21 minutes and 5 trades to get to $2,600. That was the first time I got to $2,600 today. 21 minutes and 5 trades, $2,600.
So of the 5 trades, how many break-evens, how many stop-outs?
In the beginning, we had started out with a stop out on the NQ. Then I think we had 3 break evens on the Russell, and then we had. I'm sorry, no, we had 2 break evens on the Russell.
Your first trade was a stop out, and you kept going.
It was indeed.
Okay.
And I kept going. Yes, yes. You don't quit when you get a stop out. You follow the plan. So you get for the day.
Please hear this, folks. This is so critical to your success as a trader.
Follow the plan until you get the goal for the day. That is it. And that is what I did today. I stopped out on the very first trade. Then the next trade got me out of the stop out, got me a little bit positive. I had a couple of break-even trades, and then I had one more trade after that that got me to the goal for the day. So awesome. On the NQ, it took 3 trades on the NQ and 2 trades on the Russell. The Russell were both break-even trades. The NQ is a stop out and 2 wins.
All right.
That was how it went.
Great job.
Thank you.
All right, guys, we'll pick up where we left off. We're on the Dow. Okay, this was the opening candle. These vertical lines, okay, this is today, Tuesday. This is Monday. Yeah, the markets did trade a little bit yesterday, but we weren't here. And back here is Friday, and of course, if we go on back, there's Thursday, and blah, 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 blah. Okay, so these are last week's zones. Because the new zones don't come out until when there's a Monday holiday, Tuesday morning at 6:15 a.m. Eastern. Typically, they come out Monday morning at 6:15 a.m. Eastern. So on tomorrow's broadcast, the new zones will be on my charts because all the alerts I sent out last night that I showed you at the beginning, okay, they came out at like 6:10, I think it was. 10 minutes into the life of this candle, okay? So this first candle, you've got resistance overhead. Remember, when blue and climbing gets above price, that's potential resistance. It was. So it sent price below the BBC. Same time, blue and climbing turns to red and falling. So now we're only thinking about going short. This candle opens at 755 and it drops 55 points to the target, trades through the target and finds support at the weekly trading zone. Price drops to a zone, we expect support. When it rises to a zone, we expect resistance. So it took a couple of attempts. Now only 3 things happen at a weekly trading zone. 70% of the times consolidation. That's this. That's this. 20% of the times rejection. That's this. That's this. See, this was a red candle all the way down, but by the time the 30-minute period closed, price was all the way back up here. So price got rejected at the zone, and then it got rejected again. rejected again. Okay, so we know this is a strong area of support. So when we broke that strong area of support last night, party on, dude, all the way down until the step line crosses our red, the step line crosses, and then we expect to pull back to the BBC, which we got, and it pulled all the way up to here to the previous bearish cross, which we expect to be resistance, and it was 3 times. 1, 2, 3. That sent us looking for support. We spiked the zone, but ultimately price got rejected, and that candle closed after 30. It's a 30-minute candle, red all the way down, closed here, rejected at the zone. Remember, only 3 things. 70% of the time consolidation, 20% of the time rejection, 10% of the time slice. Now, when price slices through a zone like it's not even there and closes below the zone, when that move runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So if you're looking for a window of opportunity, that's a pretty good one right there. 523. Well, so just be very conservative. You could go 520 to 500. That's your goal for the day. But what if price doesn't come down here? Well, it's either got to come down here or go back up to the BBC. If the pullback holds, which it does more often than not, then we'll trade short this area. If price overcomes the BBC and overcomes the bearish cross, then our window of opportunity is up here. Okay. Where's the market finding support right now? At the zone. Now again, these are last week's zones, but all of these targets issued last night, all the logic alerts, all the CTAs were based on last week's zones. But everything that's been issued today since the new zones came out at 6:15 a.m. Eastern this morning, all of those alerts are based on this week's zones. Tomorrow, on tomorrow's broadcast, I will have put the new zones on my chart. Okay? Okay. Let's go to the Russell. Here's where we opened. Right here, this candle. And let me double check. Make sure I'm remembering it correctly. Yep, it was 10 minutes into the open last night that we got the CTA targets out. Okay. So that's 10 minutes into the life of this candle. Now you immediately know you got resistance overhead at the zone. So there's no reason to even think about the long target until price gets above the zone and takes out this swing high. Okay. And there's room to get your goal up there, but price didn't go there. So we got to trade what's in front of us. So we've got resistance overhead, so we're not thinking long. We're thinking short, and then price gets below the BBC. We closed below it there, but and we continue down. This candle opens at 1958. 1958.1 down to 1952. Well, this first run, it dropped to We'll call it 53. Okay. So from 58 to 53, that's 5 points. Market finds support. See this low on Friday or yesterday? Comes this low. Support sends us to resistance at red and falling, which sends us back to the zone again. Another chance to get your goal for the day, or 5. This candle opened at 57.4. Let's call it 57, 52, 5 points. Then we traded through the target. Okay. And if we look left, we'll find out why price stopped here. Always a reason. And then price reverts to the mean. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Just stands for bull, bear, cross. Bearish below the green line, bullish above the green line. When the red line crosses below the green line, that's a bearish cross. See how when price popped back up, it found resistance right at the area of the bearish cross? When the blue line crosses the green line, that's a bullish cross. So if price come back up to this area right here, well, actually, we now have a bearish cross. That would be potential resistance if price were to bounce back up. Now, on the ES earlier, talked about the potential for price to drop to the zone below. And the zone is 86/87. So the low of this candle is 88. So, but we pull up to the BBC with red and falling overhead. And so now, nice little window right there. 91 down to 88. That's 3 points. Notice the slingshot has turned red and starting to hook down. Green line's already below the bias line. The bias line's red. But we got to keep moving. Russell. Here's the open. Again, got a zone overhead. Got to overcome that. So we drop and we drop. So similar to the Dow and the ES. And so we drop to the zone. Then we pull back up to the BBC, which we expect to be resistance until proven otherwise, and it was. The market finds resistance, it will go look for support, which it found at the zone. Support will send the market looking for resistance, which it found. Resistance will send the market looking for support. The zone is 37.38, and the low of this candle so far is 39.60. So it's heading there. Okay. On the NQ. 10 minutes into the life of this candle, we published the targets. This candle opened at 9:45 and change and dropped to 9:36. That's $200 per contract traded in that candle right there. From the open to the target, $200. But it kept going. All the way down to 16,811. That's about $2,000. Okay. Now, Why'd it stop there? Must be a reason, right? See where the step line crossed red and falling? See that? Price comes back to that area. What does it find? Support. Sends us back up above the BBC. Now, we've already hit the short target early on. I mean, you should have been done last night. And if you're trading the NQ, should have been done. These are 30-minute candles in the first hour. Or you might have just got short on this candle. Because again, it was 10 minutes into the candle that the targets came out. Never cry about what you left on the table. If your goal is to get your goal for the day, okay, don't look back and go, oh man, I could have got this. You could have done a lot of things, okay? But if you follow your business plan and you follow your trading plan as you wrote them based off the 2420 blueprint, which every lifetime member receives, those are two very different documents. 9 out of 10 new traders don't know they even need a business plan or a trading plan. They're just going to click the mouse and make some money. It's not how it works. Okay. So up we go. We get above the BBC. Now we can see the pullback holds more often than not, but eventually it's going to trade through BBC. And then we're going to start drawing legs in the opposite direction. We're drawing legs to the downside. Once we close above the BBC, we start drawing legs to the upside. Leg, retrace. Leg, retrace. Leg, big leg, all the way to the zone. Of course, we hit the long target on the way up. Now, in the Logic 247 alerts, the initial target is always designed to help you get your goal for the day. $100 per contract traded. Except the NQ, the initial target is designed to give you $200 per contract traded. Why? Because the NQ is so volatile that you need a bigger stop to compensate. Now, it's been over a week since these zones were published, last Monday morning. And here we are a week later, and where does the market find resistance? At the zone. On Friday, at the zone. On Thursday, at the zone. So once we find resistance, now what's the market going to do? It's going to go look for support. So it pulls all the way back to the BBC. It spikes it, but it doesn't let go. It holds on. So it gives us a bounce, okay? But we hit the step line, and because it's directly above price, that means it has the potential to become resistance. And blue and climbing has turned to red and falling. That's bearish, okay? Beautiful window of opportunity. You could even go 1904 to 1894. That would be $200 per contract traded. Right in that area. And then this is a much bigger window, 879, 63. So that would be 16 points times $20 a point. Now, that $100 a day per contract, a lot of people struggle with that in the beginning. I can't live off $100 a day. Okay. Understand. That's why, per the blueprint, you're going to put together 10 consecutive days in a row in your demo account where you reach your goal in 10 trades or less. This proves to you that you understand the strategy and how to read the indicators. Okay? And you go live with one contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, the big difference between the first and second contract, other than it doubles your money, the first contract is funded with your startup capital, the money you opened your account with. The second contract, if you follow the blueprint, the second contract, once you increase your account balance by $2,000, the blueprint is going to notify you it's okay to add a second contract with the profit you earned trading one contract. The blueprint will notify you when it's time to add contract number 3, number 4, 5, number 10, all the way up to number 20. But you only add one at a time, when it's time, and you only add with profit you earned in the market. If you have the discipline to stick to that, it will make it very difficult to blow up another account. The question is, do you have that discipline? If you know you don't, and that's something we can work on in mentoring sessions, okay? Identify the problem, troubleshoot, repair. Now, because that's tied to your emotions, we've got to learn how to leave our emotions outside of the office, okay? Emotions, I've seen emotions destroy many a potentially great trader. So we'll work with you in your unlimited one-on-one mentoring sessions. Overcome whatever obstacles are in your path, and each person's journey is unique. Okay, so we ran up to the zone from a week ago. We come all the way back to the BBC. We shoot through it, but it holds. See, it's still touching. What we want to see is we want to see it pull away. Okay. Now, like here coming down, you got that perfect stack. Price, step line, red and falling, BBC. And we just fill that window. Right there. And so now if we take out this low, so you got a double bottom here right there. Actually, you got a triple bottom. Probably end up with a quadruple bottom. But anyway, it's got to break these lows. See, the market is telling us that there's buyers here at this price. Bang. Bang. But they're weakening. See how far they sent it up before? And see what's happening here with red and falling? So we anticipate, so as we cleanly break below, see, you wouldn't put your window of opportunity right butt up against it, because the majority of breakouts fail. Okay, so you want price to prove itself. And when you have a big window of opportunity like this, 880 down to basically 860, that's a 20-point window. It would not be uncommon for it to come down about 10 points, because price doesn't travel in a straight line. Leg retrace, leg retrace, leg retrace. Now we're drawing in the other direction. leg retrace, leg retrace. Got it? Okay. So, it would not be unusual for price to come halfway down through the window and then retrace back to the top of the window or just above it, and then do it again. Once a window of opportunity fills, there's an extremely high probability that it's going to fill again. Why? Because important prices and important areas are almost always tested. Okay. All right. Crude oil. We've covered all the indices. Hold on for me 1 second. Alrighty, I'm back. Sorry about that. So we're on crude oil. This was the opening candle. It attempted higher. It opened here. It went red first. And it went green. $72.80 up to $72.98. That's $180 per contract traded in that little green body there. Then we come down to the BVC, pull back holds more often than not, just like it did here. The market finds support. It's going to go look for resistance, which it found right here. Resistance will send it looking for support. It found it at the zone, at the BBC and the zone. But as it bounced up, it ran into red and falling, which is resistance. You don't want to drive into a brick wall. So let price get below the BBC. And once this low right here gets taken out, you're painting a nice red candle. Boom. Down to the target. Now from 72.40, 71.90, it's $500 per contract traded. Support sends the market to resistance, sends the market back to support. Now that we found support, we're looking for resistance, which we'll probably find at the BBC. Could spike up and touch that zone like we did here. Gold. This was the opening candle last night, and we just ran straight down to the target. $20.57 down to $20.53. That's $400 per contract traded. Market found support. Bounce back to the BBC, which we expect to hold. The pullback holds more often than not. So down we go. We sliced through this zone, and then we retraced back to the zone we sliced through, continued in the direction of the slice, all the way down to the zone that was published a week ago, 2034/2035. 2034.6 was the low. So support sends us to resistance. Resistance sends us looking for support, which we're finding right here. At the moment, we're consolidating sideways. If the step line crosses from the left side to the right side of red and falling, we're going to pull back to the BC. Silver, opening candle, drop to the zone. You only need 2 pennies in silver to get your goal for the day. We opened at 23.35, dropped to 23.32. 35 to 32, yeah, that's 3 pennies. So that's $150 per contract traded right there. Then you hit the zone, just 23.30/31. Support sends a market looking for resistance. Resistance sends a market looking for support. Previous swing low. Back up to the zone, resistance. Back down to the target, support. See, this is way back on Friday. The support was established. And you have to expect that to be support until otherwise. So we break through, but the breakthrough fails and we retrace to the BBC. The pullback holds. So now we're back looking for support, to resistance, to support. So what are we doing now? We're consolidating at a weekly trading zone that was published a week ago. A week and a day ago. Today's Tuesday. These zones were published last Monday morning at 6:15 a.m. Eastern. The longer you're with us, the better you'll understand the zones. Price rallies up to a zone, resistance. It drops to a zone, support. Until otherwise. Okay? Once you get comfortable, the zones will become one of the most important tools in your trading toolbox. And the good news is, when you become a passport holder, you'll have lifetime access to the weekly trading zones. It's a real game changer for a lot of people. Euro, here's where we opened, dropped to the target, had a leg. See how the step line crossed here? So we pull back to the BBC, as we expect. Pullback holds more often than not. And so we drop to the zone, through the zone, retrace back to the zone, continue in the direction of the zone. And so now this zone becomes, first it was support, then it becomes resistance, resistance, resistance. BBC, pullback holds. And now you got to look way left to find out if you should be trading in this area. Back to the daily chart. We have traded down through blue and climbing. And we're sitting just at, we just hit it right there. 38% fib retracement. The one that I gave you the numbers, last night in the discussion group, I published the numbers. I showed it to you a few minutes ago before Michael came on. I showed you the post in the discussion group. Okay. Nothing magic, no crystal balls. It's just logic. There is pure logic in the markets. Are you going to learn everything there is to know about the markets? No. Can you learn enough to get your goal for the day and then develop the self-discipline to put the mouse away? Hopefully. That's our goal. Hopefully that's your goal. Now, if price continues lower, if we take out the 38% fib extension as support, you can see how it was support on this day, on this day, on this day. But if we break it, then we got the daily BBC right there to catch it. If the pullback to the BBC fails to hold, you got a 30-point window of opportunity down here. Don't expect price to go through that 30-point window all in one fell stroke. Probably come third of the way down, retrace to the top, go halfway down, trace to the top, and then complete the move. Because the next major support is the low of January 8th, the 24% fib retracement, and the low of January 5th. To become a lifetime member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have a teacher. Whether you want to be a banker, a baker, or a candlestick maker, you need somebody to teach you how to do the job. I know you've bought books. I know you've bought oodles and oodles of indicators and oscillators and all kinds of stuff. Why are you still struggling? I mean, you've spent a lot of time and a lot of treasure, and you're struggling. Why? Because you didn't have someone teach you how to do the job in an interactive environment. When you read a book, you can't ask the author questions. When you watch some cherry-picked YouTube video, you can't ask the author questions because he probably published the video 6 months ago. And he might still be around, and if you put something in the comment section, he might answer you back or not. What's different with us is we provide around-the-clock support via Telegram. You get 2 hours and 15 minutes of training in live markets. Michael explains every move he makes, every trade he takes, the reason why. Your job is to follow along, trade in your demo account till you qualify to go live, and ask lots of questions. The more questions you ask, the sooner you will learn. Once you learn, you'll go, oh my God, that was so simple. Why did I make it so hard? The trading industrial complex wants you to think trading is extremely complicated and that you have to know everything to become a trader. Well, that's some bad propaganda, okay? You only need to know enough to get your goal for the day and have the discipline to put the mouse away and go do life. Go do the thing God created you for. He didn't create you to trade, but he gave you the gift of trading as a way to finance whatever ministry he's called you to. Whether it's building orphanages or churches or feeding the hungry or clothing the naked, housing the poor, whatever, the homeless. Ministry costs money. Now, for too long, Christians have stood with their hat in their hand, shuffling their feet in front of non-believers, corporate America, etc., asking for a handout. That's not God's way. if God calls you to do something, if he calls you to a mission, he will make the provision. So becoming a trader is not about just being able to earn an above average income. It's about having time. You're no longer a slave to the time clock. This morning, I would have taken Michael to see, I think he said 20 minutes to get his goal for the day. Now, every day's not going to be like that. Some days it's going to take longer. It takes as long as it takes. Along with the live training room, you get unlimited one-on-one private mentoring. The strategy you learn, the indicators you own for life as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, forex, ETFs, doesn't matter. Price flows the same across all markets and time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you also get the Logic 247 alerts, concierge trade alerts, and you're able to participate in the Thursday night members only workshop. And again, you have around-the-clock support via Telegram. MyTradingIQ.com. You can become a passport is the all-access pass to everything we do, everything we've ever done, and whatever we do in the future. And once you purchase your passport, that's lifetime membership. There's no recurring fees. Not weekly, not monthly, not annually. And there's no nonsense. There's no upsells. There's no new discoveries. Get out your credit card. No. Once you become a part of this family, wherever this family goes, you go with us. You never spend another dime with us on trading stuff. It's everything a trader needs, all under one roof, at one low price. Let's wrap it up with our good word for today. Do not be drunk with wine, but be filled. Hang on. That was Friday. Job 5:2. Resentment kills a fool. You got to learn to forgive them. For reasons known only to God and Satan, Job lost his money, his children, and his health. If ever a man had cause to be resentful, it was him. But Eliphaz advised him, resentment kills a fool. In other words, the only thing that can hurt me more than what has already happened is allowing resentment to rule my mind and dictate my actions. You say, but I want justice. How much justice? Imagine your enemy for a moment. Picture him strapped to a whipping post. The strong-armed man with a whip turns to you and asks, how many lashes? And you give a number. The whip cracks, the blood flows, and the punishment is inflicted. Your foe slumps to the ground, and you walk away. Are you happy now? Do you feel better? Are you at peace? Maybe for a little while, but soon another memory will surface, and another lash will be needed. When does it all stop? It stops when you take seriously the words of Jesus. Matthew 6:14. If you forgive other people when they sin against you, your heavenly Father will also forgive you. But if you do not forgive others their sins, your Father will not forgive your sins. When you pray, treat me as I treat my neighbor, Matthew 6:12. Are you aware of what you're really saying to God? Give me what I give them. Grant me the same peace I grant them. Let me enjoy the same tolerance I offered them. If you want peace, make peace. If you want God's generosity, be generous to others. If you want the assurance of God's forgiveness, extend forgiveness to others. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.